Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Alex Deer with The Street, and together we bring you the morning call. Happy Monday, everybody. Scott, we had a really crazy week last week, but stocks really clawed their way higher towards the end, making that nice rebound. But futures looking pretty choppy today. What kind of resistance and support are you looking at?
Well, overall, this market's still in this wedge-type pennant pattern. And last week was frustrating for a lot of people because you had a lot of different time frames that overlapped. You had momentum short-term traders going out really long on Tuesday, including me. And then you had Wednesday's huge, harsh down move based on the Italian yields. So what that did is that knocked a lot of the traders out of the trade, at least short-term traders. And then even momentum traders went out short on Wednesday. And then on Thursday or Friday, they slowly took up that area that showed some significance and some importance, and now we're back in the macro pattern, so it's almost like nothing happened except for the pattern got bigger and actually got a little stronger.
It was funny because last Wednesday when we were down so much, I said it in jest in the office, I bet we closed at 12,000, and we didn't. We closed it on Friday, but it was the same idea that you make up what you lose, and that it's a very unpredictable trade, but nothing revolutionary, I guess.
Yeah, so the most important thing is you have to know what time frame you're trading. So if you look at the chart of the S&P, you'll see here that this overall macro wedge is still intact. You had the big reversal back in October. You had a nice move up to resistance. We broke above it. Then we hovered again, trying to figure out if we can go higher, and we did. The high of this move is 1292. And then this was Wednesday. This was the day. Look, actually on Tuesday, it looked as if we were going to get going and break out. Market wasn't ready. Wednesday shook everyone out of their short-term positions. And then Thursday, Friday, right back into that area, right back at that downtrend. And if we can start breaking above 1272 to 1275, this short downward downtrend could be resolved to the upside. It's just happening a little bit later versus when people wanted it early last week.
All right, so then how are you going to be trading it then? Because when we have futures down a little bit, it's really volatile. What's the best strategy for a trader?
Well, this is actually a good setup for traders because a lot of people didn't take stock long into the weekend, not knowing what could happen. And at this point, I would watch short-term 1250 to 1255. If you go back to the chart, this is what I would be watching to make sure that you have short-term momentum kept in there. This is halfway of Friday, goes right to 1251. So I would say traders would want to get back into some of your positions. I'm long a little spiders, but very light. I would be buying around this 1250. I would use this as your new line in the sand. You have like 1238, 1240. If we start breaking below that, that would take some of the momentum out of the trade again. So I think if we could hold above 1250, maybe you get back in some positions, and then if we break above this 1272 area right here, that's when momentum can come in, and that's when perhaps we make new highs for the fourth quarter, but we'll watch the action close.
All right, let's go to some of the individual sectors. Specifically, want to go to retail. We have a lot of names reporting. Lowe's just came out this morning with very good numbers. We also have Walmart, TJX, Home Depot, Saks, and October retail sales all on Tuesday. Is this sector that's been holding up so well something you need to avoid with all this data coming out?
I don't think so. I think that retail has proved to be strong. I think that people involved there, especially the funds, have committed money. If you look at the RTH, you will see this group could lead us through new highs and be a catalyst for the overall market. It's above all the moving averages. It's trying to resolve to the upside well before the other sectors. And if you look here, it's a stone throw away from these old highs. So this group remains one of the strongest. And if these numbers come in line or hopefully better than expected, it could be a catalyst, and that could be tomorrow.
And then what about for oil, like the OIHs, for example? We have oil prices near $100 a barrel, Brent's at 114. I read a very bullish note over the weekend that on oil rigs that owners are able to charge more for their lease rates, and we saw Ensco prove that last week with a $230 day rate. Is there juice here? Are we going to see a pop on this?
This group has been consolidating, giving us a nice new point of entry. If you look here at this pennant, you will see that the OIH is coming off the low, has had a nice new consolidation pattern. This group is interesting me a lot. I see a lot of good setups in that group also. If this could start getting above this 132 and break this downward trend, you could see at least 140 at some point in the fourth quarter, and you're seeing nice action in a lot of these stocks. In Halliburton's getting better, Schlumberger's getting better, APA, Cleveland Cliffs. You name it. There are some nice patterns that look similar to this that can go to the upside.
So all energy, because APA is not oil services, but yeah.
Something like that. And EOG leading the way, I know it's not the same either, but it's not a perfect world.
All right, so really quickly, want to hit on two stocks. First is IBM. We were going to highlight this as a stock ready to pop. Then Warren Buffett comes out and CNBC says he owns 5.5% of the company, kind of took that pop away from us. Is there more room here, or you can't chase here?
Well, it all depends how it opens up. I'll give you a pivot level. I was talking 188. I had the whole chart all laid out in front of us before that news. If you look, we've talked about it many times as actually an investment that you could own for a while. Here was the new highs. Earnings came out. We're in line, came back, regrouped. Nice sideways action. Look at this resistance. Closed right at resistance. I bet you some traders have this long just because the action said be long IBM. 188 is the line in the sand. If it can hold above 188, you're going to see this move, and you're going to see the stock well above 190. Could be today.
And really quickly, one stock is going to be Boeing, seeing the biggest deal in history over the weekend. Emirates is buying $18 billion worth of aircraft. Do you want to be trading this?
I haven't looked at this one in a while. I'll take a quick look at the chart. Boeing does look decent. Actually, it's from the lower level here. If you look at the chart, I would say above 68 and holding above this, and this opens up for a move to at least 72.
All right, we got a lot more for you for today. We have gold, we have other sectors you're going to want to take a look at. So if you want to find out what they are, join us for the entire morning call on the street.